Hello, I'm Lelde Smits for Modern Wall Street, and joining me here again on the floor of the New York Stock Exchange is Stephen Guilfoyle. Stephen, wonderful to be back with you again here.
Oh, thank you for having me once again.
Now, yesterday, of course, we had the Fed, as expected, keep rates unchanged. But the big news was that they've kept the door open for a potential rate hike at the end of the year. Are you convinced that this may happen?
I'm convinced that they want to raise the lowest interest rate. I don't really think they can. I don't think the economy is there to support it right now. They should have done it back a year and a half ago when the macro was getting better and they kind of could have gotten away with it. I really don't see how they can get away with it in December unless they force the issue.
Okay, now we did see markets stage a late rally yesterday in response to that news, but markets are down this morning with news that the pace of US growth has now 1.5% in the third quarter. What did you take away from that read and assessment on US growth?
Well, the big drop-off came in the inventory build and in defense spending. Everything else is kind of meandering along. Those are the two big negatives, especially the inventory build. So is it the end of the world? This report really isn't the end of the world, but it is an economy that's not really growing. The fourth quarter, so far, doesn't look like it's going to be any great shakes either. I think we're going to go into the end of the year with an economy that's kind of limping along.
Certainly, so maybe not the right state or environment to be then raising rates, would you think?
No, I don't think they can raise rates. I mean, like I said, if they force the issue, I know they want to do it, and I understand wanting to do it because, you know, when I was a kid, when I played Little League, if I struck out, I wanted to bat again, and they struck out, so they want to bat again. But, you know, I'm not sure it's the right time.
Okay, now we are in the thick of earnings season. What's been your general assessment of what's been coming through, and any companies or earnings that have stood out as particularly exciting?
Well, you know, everybody's beating on EPS. It's the easiest thing to do. They engineer things so that they can do so. The revenue side's a lot dicier. We're seeing misses on maybe half of the firms on revenue. Year-over-year revenues have been absolutely awful. So it's not a good quarter by any stretch earnings-wise, except for some of the infotech names. You've had some of those names really beat on every level, and the stocks have really popped. So in that area, you're doing well.
And could you give us some of those names, Stephen?
You know, the Googles, the Amazons, it's the ones you know. It's the ones that the consumer is most comfortable with. Those have been doing the best so far. And going out in about 2 or 3 weeks, you're going to have the retail sector. And I think that could be really interesting too.
Okay, so we'll be keeping our eyes on the retail sector, among other things, but looking forward to speaking again with you next week. Thank you for today.
Oh, thank you for having me.